Welcome to the SBI Securities morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. And we shall also be discussing on the key sectors and stocks in focus, where the chart setup is good and along with that derivative data is supporting it. Yesterday, we saw Nifty and Bank Nifty both trading in a tight range and witnessing a flat to positive close, while stock specific action was witnessed in private banks, PSU banks, then pharma, metal, and cement names. Now, we expect the markets to consolidate at these levels before making the next move, as the rally in the last few days has been sharp in case of large cap names. And more so because US Fed meet is scheduled on 19th and 20th of September, and because of that the trading action in the next few days could be a bit muted, and we could see stock specific action over the next few trading sessions. Important is to track Brent crude prices now, which have inched up to $93 a barrel, and along with that the dollar index is sustaining above 105 levels. Now believe me friends, this is not a good news from the macroeconomic standpoint, and this would definitely create some kind of resistance at higher levels. Now, hence we feel that in these uncertain conditions, we should be preferring large caps over mid and small caps. And even if it's for mid caps, then only look for good quality names, and that too in a staggered manner. Now, coming to Bank Nifty, for the day we are expecting the banking index to take support around 45,750, 45,800 levels. Until this zone holds, continuation of the positive trend up to 46,250, 46,300 could be witnessed in the coming few sessions. And if Bank Nifty sustains above this level, then it would move into an uncharted territory above lifetime highs. Apart from the private banks which are already moving, the PSU bank index could continue its positive momentum for the next few days, with top picks being PNB, Union Bank, Canara Bank, as well as Bank of Baroda, where there is a significant long build-up in futures being witnessed. Nifty PSU bank index has scaled up a fresh all-time high above 5,000 levels, and we are expecting this index to continue its present uptrend up to 5,200, 5,250 levels. In terms of open interest build-up, significant OI build-up is witnessed in 46,000 calls and puts both, where the total premium for the pair is around 500, 540, and this implies a trading range of 45,500 on the downside and 46,500 on the upside. Now, coming to Nifty levels, important support for the Nifty would be 19,950, 20,000 levels. Until this support zone holds, we could see this momentum continuing on the upside up to 20,250 levels. Now, if we see the weekly option chain, highest put writing is witnessed in 20,100 and 20,000 strikes, while call writing is witnessed in 20,200 and 20,300 strikes. This implies a near-term trading range of 19,950 on the downside and 20,250 on the upside. Now, in case of any global volatility or any profit booking move in the index, 19,950 is taken out, then the next support levels for the Nifty could be 19,780, 19,800 on the downside. Important is to track India VIX from here on, because till now India VIX is trading on a muted note. There is not much action happening in India VIX, but in case if it moves about 12.80 levels, where the 200 DMA for India VIX is there, then above that levels, that could mean that VIX could head up to 15, 16 in short term. And in case that happens, then that could be kind of, we need to have a cautious approach with respect to the long positions in index. So 12.80 is the most important level in case of India VIX. Now coming to FII data, FIIs have been net buyers in cash segment to the tune of 294 crores, while DIIs have been net sellers to the tune of 51 crores. If we closely observe the open interest data of market participants, FII's long short ratio for index futures has slightly slipped to 65% compared to 66 a day earlier. FIIs have sold index futures to the tune of 1730 contracts. They have also sold stock futures to the tune of 9,028 contracts, and on the option fronts, they have sold 37,000 call options, and they have even bought 25,000 put options. Now, this looking at this overall FII data in derivative segments, it's kind of negative. However, the quantum of these numbers is very small now compared to the positive numbers. What we have seen in the last few sessions, the negative numbers are very small. So we should wait for a day or two before making any conclusion on these numbers. Now let's discuss about stocks and sectors where there could be some interesting opportunities for the day and for the next few days. Along with private and PSU bank names that we've already discussed and we have been discussing over the last many sessions now, we are still bullish on these private as well as PSU banking names. Apart from that, we are bullish on names within IT such as Infosys and Tech Mahindra. Remember, friends, we were discussing about TCS and HCL Tech also, and we are still bullish on that. But fresh momentum we are observing in Infosys and Tech Mahindra. And within the cement names, we continue to stay bullish on Ultratech, Grasim, and a fresh entrant to this is Dalmia Bharat also. Now, in all these names, what we are discussing, there is a significant long positions built up in futures, and long built up is being witnessed here. So, what we feel is that within the IT names, Infosys, Tech Mahindra, Cement, Ultratech, Dalmia Bharat, Grasim. Within the metal names now, interestingly, Hindalco and NMDC has given a good breakout on the upside. So we should be keeping them on radar also. And from the pharma space, Oro Pharma as well as Apollo Hospital. So these are the stocks where we feel that the chart setups are displaying higher relative strength, which implies positive momentum going ahead for these names and these sectors. And a lot of these stocks are witnessing long open interest built up in futures. So the charts and the data both are supportive of each other. Now coming to USDINR, the levels are not much changed compared to yesterday, and today also we expect the pair to trade in 82.75 and 83.30 range. And with the dollar index strengthening, we could expect USDINR to probably witness some weakness towards 83.20, 83.30 in the coming few sessions. On the downside, 82.75 would act as an important support. Now, just to summarize, we expect the indices to witness buying support on dips, with key support level being around 19,950 and the resistance level around 20,250. While for the bank nifty, the supports would be around 45,700, 45,800 levels, and the resistance would be 46,300, 46,350 levels. We also expect the large caps to still continue their outperformance over mid caps and small caps. And also, just to add to this, as we discussed, that one should not lose sight on India VIX, where 12.80 levels is very, very crucial in the next few sessions. So, friends, that's all for today. And thank you all for listening to our podcast regularly. And we hope you are finding it useful with respect to your trading decisions. So, do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.